Hello everyone, Charles here with slicktrade.net, and in this presentation I'm going to go over our upcoming market commentary for the week. Okay, so last week on the New Zealand dollar, this was where we ended here. Wait a minute. That was the 20. Yes, that is correct. We had break to the upside, okay, and we reached a potential of 65 pips. If you look at the candle bodies, it was closer to like 45 to 50 there. So it really kind of depends how you trade this. If you trail stop it, if you manually trade it, or if you just set specific take profits, okay? But either way, we did have a nice little push to the upside, and then we dropped back down into the same zone that we were in about a week, a little over a week ago at, okay? That is this zone right here, and this is a key support level, as you can see right there, okay? So as far as results are concerned, that would be still just the 50 pips, with the potential to gain a little bit more there, depending how you traded it. So for the upcoming week, like I said, we really came back down. Excuse the helicopter. Not sure how loud that is in the video. So for the upcoming week, we're looking at about a 50 pip range that we would like to hit or stay within as far as new defined ranges go. A lot of times that range is closer to 30 to 50, but I always base it on previous support and resistance, okay? Listen, we're going to pull up just a little bit to these candle bodies, the wicks here and the candle bodies here. This is definitely a key resistance level, and this is a key support as far as the 4-hour time frame is concerned. Okay, so here is our new defined range. This is the upper level here. And here is our lower level. Okay, if we take a look just to double check, that's 41 pips. So we are within that 50 pip range. And we'll have this be moved to today here. Okay, grab a screenshot for you guys. And if we take a look at the daily, all right, on the New Zealand dollar, we're watching for opportune short entries. Okay, we're in a potential consolidation period, and our key levels were right here and here, this being the upper and this being the lower. Okay, so depending how you traded this, if you trade it based on a breakout, then you hit that first take profit beautifully, and without really any kind of resistance coming back at you. Okay, now if you were waiting for short entries, okay, then you also would have gained a decent number of pips from this with that heavy drop that happened on Friday. Okay, so either way that you traded it, you definitely gained something from it. And if you look at that, you gained could have gained about 56 pips roughly, okay, with that initial break. If you were only watching for short opportunities, you would have gained about the same as well here, okay. About 44 pips from the upper level. However, if you were waiting for the candle body to break or not, since each of you do trade this a little differently, you may have waited until it did come up to this level with the potential to definitely gain more off of that. So, I mean, if you traded it that way, you would have gained about 86 to 90 pips on that move alone. So, it really kind of depends how you traded it. Either way, you would have gained something from it. As far as the upcoming week is concerned, that drop back down went directly back into that defined range from last week, or key levels. Okay, so we're in the same boat. I'm going to keep those same key levels, and I'm really going to keep the same plan of attack. Right now, I think we're just seeing that consolidation period. Okay, price rose heavily from April of 2020. If you see this, price it pushed up. Okay, we had our confirmation of price going below the whole moving average here. And that was in February of 2021, and then here we had in March the break below the trend line, and now we're pushing back up to that trend line. Okay, so I mean this is definitely a clear indication that we are in that consolidation period. Okay, price is trying to make up its mind whether it's going to push to new highs or whether it is in fact going to go into a short trend, okay, or trend reversal. So those really key levels to watch they're just plotted right out here for you. Okay, I think we're going to see price kind of push in between this full range. Okay, so make sure that you have good take profits and stop losses set. You don't want to get trapped into a trade. You never know how long a consolidation period is going to continue, and once it makes its break, as far as continuation or trend reversal, you do not want to be stuck on the wrong end of that. So either wait until price has really shown what it's going to do, or keep real nice take profit and stops in place to protect your profit. Okay, so that is about it. There's not really a big change here. Grab a screenshot, and we are indeed in that consolidation period. Key levels are the same. Okay. So, Aussie dollar, 4-hour time frame. Last week, beautiful break to the upside. Very little resistance pushing back. Had the potential to gain about 59 pips from that. And then price kind of had to back down. Okay, I think we're probably looking at the same thing as far as the daily time frame is concerned, and the fact that we are in a consolidation period. Okay, we could still be, let's see here. Yeah, definitely same kind of setup happening. Okay, price is making up its mind. So on the 4-hour time frame, I'm going to set the lower new defined range right here. History repeats itself. So this is a great level to base your support on. As far as the resistance level, I'd say it's like right about there. Nah, I've got some wicks in there too. Let's grab that. So let's make sure we're still within that 50 pip range though. Yep, 41. Pretty clear cut as far as the setup. Upper lower. There go. And when we come over to the daily here, if we zoom out, overall, we are in a long trend. However, same exact scenario as the New Zealand dollar on the daily time frame, and that is that price has broke below the Hall moving average. It has stayed under it ever since. The professor setup, it hasn't actually shown for sure that it wants to go into a short yet. We're still showing a long on the trend rider. So price is in that consolidation period. It also broke below that trend line. Okay, and same kind of scenario. Well, instead of April, this really started in March. Okay, between March and April of 2020, price broke up and continued to make new highs and new higher highs and higher lows, sorry, ever since then. Okay, so we will see if price actually sets up for a trend reversal short, or if price breaks above these levels that we have plotted out, as far as our upcoming, current even consolidation. Okay, we're really staying within that 0.78184 level and 0.75853 level. Those are our main key levels as far as where this sideways movement's probably going to hit in these upcoming weeks. If price breaks below the 0.75435 level and the candle body holds, then I think we will see a little different scenario and a trend reversal to the short side. Okay, now if price breaks above the 0.78497 level, then we can expect it to head up to the weekly resistance of 0.78822. If it breaks above that and candle body holds, then we're more than likely going to come into this zone of 0.79068 to 0.8070 or 80070. If price breaks above that level and candle body holds, then we are definitely seeing a continuation of the long. But that is a huge range, okay? So you can still gain from that. You're looking at, a 462 pip range. You can gain in the upcoming weeks from that, as long as you're keeping a solid take profit or take profit levels with a trail stop, and stop losses. Okay, so that's what we're looking at. We're really still in that same key levels. Okay, if you traded this last week based upon the break, then you gained from that about 34 pips. As far as results are concerned, that's 25. Grab a screenshot here. Make sure that we're currently in consolidation. Potential short reversal in the upcoming week, so we'll see. Okay, same key levels. That's about it. Dollar franc, 4-hour time frame. Okay, initially we had a break to the upside. Then we had a continuation down. So that only went up about 19 pips as far as that is concerned. Okay, that would be a 38 pip loss. As far as results are concerned, that would be minus 50 pips. In case if you don't base it on previous support and resistance, then we base on 25 pip increments. Since that was above 25, we're just going to shoot right to 50. Okay, so you probably lost less than that, or even broke even, depending on the trails and just method in general that you use to trade on the 4-hour. As far as the upcoming week is concerned, we are looking at the same kind of setup. We're right within it here. I know we're a little closer to the short, but we are also in a short trend on the 4-hour time frame. Okay, so not much changes there. As far as the daily is concerned, if you traded this based on a break, then you would still be in this trade. It broke to the downside. It did not quite hit our take profit one. It was real close. Depending on the broker you use and charting platform, you may have gotten out of this trade already. You may have hit a take profit. It moved about 30 pips in our favor, but as far as results are concerned, that would just be 25, and you would still really be in this if you base it just on these take profit levels that I put. If you base it on 25 pip increments, then like I said, you would have already hit that first take profit. If you use just a trail stop and move to break even, then you would have broke even. So I'll just leave it at 25. Okay, overall, price broke up and it really showed that we were going into a long. We've come back down into this initial range that we were at back in July of 2020. Okay, so I think what we're going to see is something similar, sideways movement. We're in a consolidation period. Okay, if price breaks below this 0.90716 level, I think we're going to head to the 0.90316. Okay, if price breaks above 0.91881, then I think we're going to head up to 0.92336 and continue from there. Okay, we will see. Right now, everything as far as the daily is concerned, we're just looking at consolidation and sideways movement. As far as key levels are concerned, price came right back in within those levels, so we're keeping those key levels the same. Jeez. Okay, like I said, currently in a consolidation period. Key levels, same. Euro dollar, 4-hour time frame. We had an initial break to the upside, and then we broke and created a new low there. So if you traded this, then you had the potential to gain about 37 pips. As far as results are concerned, that would be 25. Okay. As far as the upcoming week is concerned, we're going to come right down to these tails here. And I'd say right about there for resistance. Let's check and see if this is within that 50. It is. It's 45. So that's beautiful. Pretty clear cut and dry on the 4-hour. As far as the daily on the euro dollar, price did break up but did not hit the take profit one. Pretty much the same as the dollar franc did. Now, if you have been with Slick Trade for a bit and you've watched these videos, you've done learning, you know that the euro dollar and the dollar franc are mirrored assets. So that means when one is headed to the upside, the other is headed to the downside. They create very, very similar, if not almost identical patterns. Okay, that's why they're called mirrored assets. Okay, if you traded this based on this break, you have the potential to gain about 19-20 pips. That's it. Okay, and then price headed right back down to our whole moving average. So you may be out of that trade already, or you may still be in it with a stop loss around the lower side of those key levels. Okay, we haven't broke below the whole moving average, or really kind of right at it, so we'll see what happens with this upcoming week when the market opens. Okay, if you are not in this trade already, I would keep key levels pretty much the same. I know we're right at that. I might give a little cushion there as far as the lower side, but really our key levels and take profit levels are all in that same vicinity there. Like I said, if you're not in it though, I would watch what happens on Monday. I feel like Monday is going to be, it usually is, Sunday with market open, sometimes there's gaps in the market. But Monday, if you kind of watch what happens throughout there and then wait till Monday night to after the candle body on the daily forms fully, then set up your pending orders or manually enter, depends how you trade it, or even wait until like Tuesday morning when something happens. Okay, so we will see what price does. Really nothing has changed here though. Okay, this I'm just going to put 0 because it wouldn't have necessarily hit the stop loss, but we are really close, so we'll just see kind of what happens in the upcoming week. Okay, the pound dollar, it did the same kind of thing. It's in that consolidation. That's all there is to it. If you traded it, went up about 39-40 pips in your favor, I would just say 25 here, or you may still be in it. If you use a break even, then you would have broke even on it already. As far as the upcoming week, not much has changed. We are still within those key levels, and we are in a consolidation period. Okay. Sorry that my market commentary is not a little more exciting today. And we did have some pretty, nice movement, but when we're in these consolidation periods, it's just kind of a lot of the same key levels and, just waiting for price to do its thing and create either a new high or a new low and make up its mind on what it's doing. If you use the price action template, really kind of the same thing. They're really waiting for price to just do something. That is about it. So I will get this out to you guys. And that is about it. Watch out for news this week. If you don't have a news source, definitely go to our free education and news link here, and you can see anything that's coming up, okay, and when it is coming. That does get updated constantly through investing.com. And that is about it. So you guys have a good one, and I will see you in the room.